Hi, everyone. Today we're joined by Cem Karsan. He's the founder of Kai Wealth to talk about the market, the economic impact from a soon-to-be Trump presidency, as well as his bigger picture view on things, including volatility. Cem, always appreciative for your time. Thanks for being here.
Absolutely. Thanks for having me, JD.
So, of course, no shortage of big announcements with regards to economic plans for the incoming administration, including the latest on tariffs and a back and forth. Talk to me first more broadly how you're viewing the potential impact of tariffs, both on the markets as well as the state of the U.S. economy, both in 2025 and maybe even beyond that.
Yeah, I think the biggest thing to keep in mind is everybody likes to focus on the big shiny object, right, which is Trump or the new presidency. The reality is we've been in a very populist regime for about 4 years. The push that we've seen, which is a secular inflationary push driven by protectionism and populism, is not about Trump. It is about what people want. There's a massive structural inequality that's developed in the last 40 years, primarily driven by Federal Reserve policy. And a vehicle of that is Trump. So this is taking us down a path that we've been trotting down for some time. Now, there are some accelerants and path matters, but tariffs and protectionism, whether we're doing that, again, through tariffs or some of the other protectionist measures we've had, right, in the last 4 years, are very similar. I think the difference is rhetoric. I do think Trump is going to use tariff rhetoric to try and extract much of what we have been, but maybe more. And that the important point here is that we are moving away from globalization. The major effect of that is inflation as a result of higher labor costs, higher input costs from all kinds of other inputs as well. And if you're not focused on those themes, you're going to see a dramatic underperformance. If you're playing the game of the last 20 years, which is really lower interest rates. So you invest in growth over value, you invest in globalization, you invest in technological development. That's the game of the last 40 years. It's worked incredibly well. If you go back to the 20 years prior, it worked incredibly poorly. Broad market performance, 68 to 82 was 14 years prior to the lowering of interest rates, right? And the supply side approach we've had for 40 years. The equity market performance was down 67% in real terms over those 14 years. So not great for broad markets, definitely not great for growth. That said, during that period, things like energy, structural inputs, inflationary hedges, companies with negative working capital, things in that vein did incredibly well during that time. And I would expect that's where we're heading, Trump or no Trump. And again, that is a secular reality, not a 1 month call, a 3 month call. That is a multi-year, really decade call that we should be focused on.
Cem, I wonder how you see tariffs or a new tax policy or even things like the promise of deportation as potential disruptions to the U.S. labor market in its own way, upending the current path for the central bank for interest rate cuts.
Yeah, the most important thing, again, we've been in a period of deglobalization. We can accelerate that through more tariffs and more protectionism. But in my opinion, even bigger than that is an inability to deal with that protectionism through immigration. The reason labor inflation has not been worse than it has been, by the way, it is still running at over 4.5%. Right? I mean, people look at the core number and say, okay, at the headline number and say, okay, inflation is down. But if you look at both housing and labor, right, the two things that are local, so service inflation, right, and housing, which are two things you cannot import, those are still running at 4 to 5%. The reason it's not higher, and that's very high, is because we have had an open immigration policy. The United States is able to draw immigrants. People want to come here to work. And if you allow people to come in at a higher rate than usual, you're able to stem some of those labor costs. Because again, at the end of the day, Americans, for the most part, don't want the jobs that the Chinese have been doing for us. There are people who are willing to come work at those prices, at those rates, right, over the border. So we've had an open immigration policy. That's been incredibly unpopular because we live in a populist time, and people say, "Oh, those people are taking our jobs," and yada yada. Right? Xenophobia is something that's as old as time. If we close the border for good, even worse, if we start deporting people and close the border, you are going to see massive labor inflation. Service inflation will go through the roof, period. Full stop. It is a simple function of supply and demand. We do not have enough supply, and we're trying to import all of the demand that we have exported in terms of globalization for 40 years into our country. Good luck. Good luck. That is a recipe for massive inflation, and I would look for longer-term rates, break-evens in particular, to go higher and eventually drag the long end of the curve, kicking and screaming against the Fed's will.
Which I guess gets to a bit of a broader question in terms of managing potential inflationary pressures under a new White House. Obviously, we think we've got a sense here that Jerome Powell will be allowed to finish out his term. We know that the incoming president has said perhaps I should have at least some say, not to totally dictate monetary policy, but arguing the president, especially himself, should have some kind of input. But, that does kind of get to a bigger conversation of the so-called Department of Government Efficiency, or however this is actually going to work. I don't know that everyone in Washington quite knows how this is going to work yet, Jem. But I wonder how you see financial regulations changing under Donald Trump, especially with a few new faces that were not there his first time.
Two super separate topics. Let's talk about the first one, the Federal Reserve and monetary policy. It is the seat of power. The presidency is actually less powerful than the Federal Reserve if he does not control the Federal Reserve. Trump is intent on being the most powerful person he can be. If you think he's not going to try and influence Federal Reserve policy, you're missing the picture. And by the way, it doesn't matter if Powell is in for another year. Trump can install a shadow Fed chairman. What does that mean? That sounds more nefarious than it is. Say, I am going to choose so-and-so to be the Fed chairman in a year. The second it is known by the market who that is, that person, because the market is forward-looking, will control Federal Reserve policy, at least in terms of the mouthpiece of where we're going and what's going on. So you better believe that he's going to control it one way or another. Either Powell's going to play nice, or he's going to exert whatever leverage he wants by instituting, by putting the new person in charge as a shadow Fed chair. So I would expect that. I think the market is not expecting that. You better believe he wants a hot monetary policy. He wants supply side economics to pair with, and by the way, that's not necessarily bad policy, to pair with the demand side economics. That's more likely to balance inflation, actually, in terms of secular effects. But in the short term, it's more likely to lead to a very hot economy and pair cyclical with secular inflation. So I would be very watchful for that. Again, I think people are not talking enough about what's about to happen at the Fed. So that's one. Two, to talk about DOGE and the Department of Governmental Efficiency. I think there's two important points to be made there. One, it's going to be very hard. The narrative is wonderful, right? Everybody wants a more efficient government. The government seems bloated. We live in a very populist time. The reason Trump was brought to office is because of populism. The thing about populism is populism only means people need to get more money. People want, at the bottom in particular, the broad masses want more of a share of the economic picture. If you start deregulating, the majority of government is there because it's distributing money to ways that the free market does not. The free market naturally sends money to the top, sends money to corporations, et cetera. So as much as the idea is wonderful, and I'd say 95% of people will say, yeah, government sucks, like burn it down, right? The problem is that if you start burning it down wholesale, you're going to have problems. And constituent by constituency, congressman by congressman, you're going to have a hard time pulling away all of the things that their constituents want. It is natural state of affairs to want more, not less, for your constituency. And so tearing it down sounds wonderful. I think in practice it's highly unlikely to happen. And to the extent we start doing a lot of that, I think you're going to get way more pushback than this government realizes. And so I'm very skeptical that we're actually going to be able to make the big changes that they're promising on that end. Now there'll be some narrative. There'll be some headlines, kind of like Trump, rebuilt the wall. Well, he didn't really rebuild the wall, but we talked about it, right? And there were definitely parts that were rebuilt and put up on the headlines. There'll be immigration headlines. There'll be Doge headlines. But I think when we peel back and look at what actually happened, it'll be incrementally more than maybe was done before, but not a sea change.
Yeah, especially considering the fact that, Congress would likely need to be responsible to enact any of the recommendations that come from this agency. You can create the agency using executive order, but actually putting those across the finish line with 53 votes in the Senate, much easier said than done, I think, to your broader
Yeah, the House is a bigger problem. The Senate is one thing, right? You can get those senators to fall in the line, but the House is an unruly place, and the margin there is very, very small.
I like the word unruly. I always call it the wild, wild west from when I was a reporter down there. Anything goes. Members of the House especially are independent contractors more than they are aligned with a political party. And I think we'll watch those dynamics at play in the 119th as soon as they start up in early January. I wonder, to the point of deregulation, Cem, other industries that you see maybe besides finance most directly benefiting from that deregulation, not just for next year, but with a longer term horizon over the next 2 to 4 years?
Financials, full stop. And I would include Bitcoin in that and crypto in that. I think if you think about what Elon has been most adamant about railing up against is the financial system and the regulation of the financial system. The SEC and CFTC are in for a rough 4 years. I do think that they're largely going to be defunded, maybe even larger policy to change them for good. I think that will benefit, obviously, financial institutions. I think the added benefit of a lot of these financial institutions is they benefit during inflationary times. They get leverage on inflation. Asset managers are a great place to look. Get a lot of negative working capital. Insurance businesses. These are great places to be, not just because of deregulation, but because how great these businesses perform in inflationary environments. I would expect those to be a very hot area. They have been. People have been kind of scratching their heads. I think the original thought was, it's because of the curve steepening. I think it's much more complex and a lot more going on there than people realize. And then the add on to that is crypto. The one thing that stood in crypto's way of being kind of millennial on down gold is the risk of financial regulation. I think that's been taken off the table for at least 4 years, maybe longer. And that is a huge boon that gives a lot of runway to an asset that's otherwise had a potential major tail risk sitting out there in regulation.
And you teed me up perfectly for my next question and topic, which is your expectations for crypto performance more broadly, especially in the long run under a Trump presidency, with, even the things like a new look SEC that can more clearly define what's a security and what's a commodity.
Crypto's benefiting from three things. One, structural inflation. So it's perceived as a store of value. So think of it as gold, right? Digital gold. Two, it's benefiting from millennial demand. The primary beneficiary during a populist environment are the youth, the people who are coming to political dominance, who are calling for that populism. Millennials are a demographic bubble. They're the ones that have been underperforming as labor for 40 years, while boomers on up, who have been capital, have been outperforming. So wealth inequality has really hit the younger generations, and they are the ones who believe that it is a store of value. So that is kind of the second benefit here and reason why we've been in a bull market and likely will continue to be in a bull market for the next 10 years for crypto. Outside of that, third of all, is the actual lack international kind of flight to quality coming back to the U.S. right or trying to escape international shores. Much like the dollar has seen strength, things like Bitcoin have seen strength as a result of that too. Again, tied to a store of wealth, but a little bit different in the sense that we're in a period of deglobalization. So people want to get money out of other countries. People want to find a store of safe holding, and it's primarily driven by a millennial generation on down. That is the primary beneficiary of money here, and a movement of the political winds. So I think crypto will continue to benefit. And again, having lifted off the deregulationary cap, the regulation on that industry for the next 4 years is a major tailwind. So I think there's more to come. I think, to be clear, 13 million or whatever Saylor's talking about is insanity. Insane things can happen, but I think you could probably target a 10x from here in the next 5 to 10 years. But again, I'm not in the 10 million to 13 million camp. I think that's pretty crazy. I will add one last thing. This is a 5-10 year call. I do think regulation will eventually become a problem for the industry, but we're far from that.
That's great perspective, because I know you like to keep a long-term view for things like that. So I appreciate that. No, and then finally, with an eye on volatility, love to get your take on the newly available Bitcoin ETF options from BlackRock and other similar projects. I think for a lot of average investors may seem complex. It's obviously very volatile. Have you been tracking these options at all? And how do you think investors should be looking at these new opportunities that are flooding the market?
Yeah, it's a good thing for crypto writ large. It will create more players in the space, more stability, more liquidity, more dynamic positioning. All of that are good for the industry. I would argue a lot of the structural effects that exist in other like equity markets and a lot of other commodity markets, et cetera, will likely now be coming with time to the crypto space. And so I think those are generally positive. They generally force higher prices over time and help manage stability over the long term. Now, in the short term, though, that meaning over short periods, that can increase more tail and faster moves. So the vol of vol tends to go up when you have more options and positioning that's nonlinear. So we have seen that broadly in markets writ large, and I would expect that to slowly begin to grow in the crypto space as well.
All right, that's Cem Karsan. He's founder of Kai Wealth. Very grateful for your time. My best to you and your family for the holidays. Appreciate your perspective and look forward to talk with you again soon, Cem.
Happy Thanksgiving, everybody out there. Enjoy your time. We all have a lot to be thankful for. Take care.